Hello everyone, here's gonna be a video that's gonna be a game changer for you, and you just don't want to miss out on this. You want to watch this video to the very end. But before we continue, I'd like to give you the setting to this Fibonacci before we continue, right? So you may have to stick to the end of this video. You may have known this, but this video is going to open your eye maybe more to the ABC strategy and a few other things I'm going to add to make it different. By the way, this is CN and you are welcome to another video. So let us go to the Fibonacci. As you can see, this is volatility 75 on 4 hours time frame. Imagine you're able to catch this kind of move from here. Okay, this is sniper to this point. I've already reached my TP, but because of this video, and of course I would also want it to get to the extended TP, right? This is extended TP1, extended TP2. As soon as it gets to this place, I'm going to close, but then I've already trailed my stop loss. So let's just get the setting to this particular Fibonacci. So you will go there, just copy whatever you see here. This is the Fibonacci retracement level that I am using, and that has been working perfectly fine for me, right? So I'm going to click here and you see the entire setting, right? You can see the entire setting. We have these just this way, copy it this way, set it this way. Whether you are using MT5 on mobile phone or you are using what is it called, or you are using trading view, use this same setting and you are good to go. Now this extended is actually if you don't want to take your TPs on any of this level, okay, from here to here, depending on where you are entering, right? You can extend your TP. That's why you have extended TP1, extended TP2. So if you have taken a screenshot, I have recorded this setting. Let's go back to the charts straight up. So first and foremost, let me remove the Fibonacci, right? And as you know already, this is volatility 75 on 4 hours time frame, and this trade I've been holding it since yesterday, right? And you can see this is a massive trade, massive profit, and I've locked up the profit. Nothing can make this trade to go into loss again, and it always hit different when an OG trades, right? And you can trade the ABC strategy on any asset, on any pair, because price move in waves, right? It move in waves, and you just need to catch one successful wave, okay, and you are good to go. Now you can see that this pair volatility 75 has actually been on an uptrend. You can see this is 4 hours. It's been on an uptrend whereby it's making this is the origin of this move to this point, and you can see, of course, from here you can see higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, now to this point there was what looks like a change of character, but then it still continued an overall movement. So the overall is still upward. Now the point is this: it is the pullback of price that you want to be taking advantage of. Now whatever I'm saying, this is a bullish scenario. What I'm saying here, the opposite is the case for bearish scenario. So price will always make a move either to the upside or to the downside, and then will retrace to a certain level or pull back to a certain level. I've made a couple of videos on Fibonacci where I explained how the Fibonacci level came to be, right? They're all on this channel, but this is just going to be the ABC concept and integrating it with the Fibonacci level to get authentic entries, and with some other confirmations that will serve as a confluence. In fact, the confluence is what I'm much more concerned about right now, because it is basic. We all know that price move in waves, and as it moves, it pull back. It doesn't just run like tap water. Brrr. As it moves, it pull back, it moves, it pull back. But then there have been numbers. I'm not going to Fibonacci proper now, but there have been numbers that have been observed that price will either retrace or pull back to a certain percentage. It can be 28% pullback, it can be 38 point something, it can be 50% pullback with some call golden range. So it can be 61.8, it can be 78.8 or whatever, or 0.2. That is it. But then which of these levels are seen as golden level, or the most important levels where price may likely get to, and then it will continue in its original direction? And how do you know? What are the things you need to look out for to know that yes, although this price is pulling back, this is the point we are looking at, that as it is reacting based on what it's doing off here, it may likely go back to its original direction? That's exactly what I want to show you guys right now. And then I'll mention some of the confluences that you should be looking out for when you want to do the ABC, trade with the ABC strategy. Now, as you can see, price is still pushing up, and we may likely get to the extended TP1, right? And then here are some of the things you need to take note of, right? Now, if you look very well, you're going to see that price actually got to this point and started pulling back, right? But there's a reaction at almost all this level, but then these are the levels that are my own personal golden level, right? The 38.2, the 50, and then the 61%, right? And there are confluences that will enable you to take solid and authentic entries. Now, I did not say perfect, but solid, right? Valid entries. Okay. As price are coming back to this point or pulling back, now you're going to see that it's reacting even at this point. But then it is the confluences. Already you must have placed your Fibonacci level, and you must have also noted your A, your B, and of course you are waiting for a C to enter. Okay, now as price got to 38.2, he reacted. There was a reaction, right? Although there was a rejection. Now, when it got to 50, there was something that looked, let me zoom so that you see properly what I'm saying, right? When it got to 50, this is 50, you can see, was there any sign that price will go back? Maybe yes, maybe no. Now, if you look to your left, you're going to see something that looks like a level, right? When price was going up here, it broke this, it created this structure, something that looks like this, and then broke above it. And as it was coming down, this place became a kind of support to it, but is a bit not really at the 50% level. Now, price gave us what looks like advanced market structure, whereby price will do something like this and then give you as if it wants to go up, and then it will come down again, creating a liquidity or a kind of inducement. This was a kind of inducement, and then it came back and swept that inducement to get to the level of 61.8, right? And then it moved up again and came back, creating a kind of double bottom or equal lows. Now, if you go to lower time frame on this, if you go to 15 minutes time frame on this, you're going to see that it was actually equal lows or double bottom. As you can see, this is at this point. So, and that was what informed my decision to take the trade, right? Now, there are other things you need to look out for. Now, if you look to your left, you're going to see that this place was a verified support. Now, before a resistance, but now a support. How do I know? If I bring out my cross, you're going to see that, look at this point. Okay, the whole of this place is a support or was a resistance. As look at this point, it was a resistance zone. I'm talking about this place. There was a touch here. You can see price got here, pulled back, and then he later broke it. Then after breaking it, he came back, and that place served as a support. He moved up again, he came back, and that place still served as a support before he finally broke, and then he came back and broke it. Okay, Now this was where it didn't continue going down again, and then he moved up to that level. He struggled, and then later broke it. Now when this move, this whole move from here to here, when a new high was created, which was this that broke this, okay, a new high was created, and then price started pulling back, I noticed that this place is going to serve as a support to it, and it's exactly at that 61.8 level, okay, which now is a point of interest, and of course is a confluence already. Now the support level, the Fibonacci retracement level of 61.8. Now the equal low, which also is a double bottom. Then if you look very well, you're going to see rejection candles on a support level. Rejection candles on a support level. You can see a pin bar here. Then you can see some other candles that signify rejection, right? That's how many confluence. Now the Fibonacci retracement level, of course the ABC, and then you have the support and resistance level at that point. Then you have the classic pattern that was developed, which is the W or equal low or double bottom, if you choose to call it so. That is 3 confirmations, and of course the candlestick rejection, which is 4. We have 4 confluences telling us that yes, at that level price may likely go back. So I had to place my trade, and then my stop loss initially was just right below this 61.8. Now ideally, if you are entering a trade based on Fibonacci level, your stop loss should be the next Fibonacci level below it, but because this was happening exactly at this point, I didn't want to take much risk. I had to put my stop loss here at the first place. But then originally your stop loss, if you're entering from 61.8, your stop loss is supposed to be just right below 78.6. If you are entering from 50%, your stop loss is going to be just below 61.8, right? But then depending on your capital and how long you want to stay and how strong your confirmations are, you can actually put your stop loss right below a major your confirmation. Just at this point now, this place was a double bottom and then other confirmation, so that gave me the confidence to put my stop loss just below the 61.8. and you can see what are you going to target, right? Any of these levels, if you enter your trade at any of this level, for instance, if you enter your trade assuming the retracement got to 38.2, your first TP should be the 0.0 level. That's going to be your TP1. Now if you enter your trade at 50%, your TP1 is still going to be your 0.0 level. If you enter at 61.8, your TP1 is still going to be here. So now the more further the retracement or the pullback, the more reward is going to give you. Now if we had entered from 50%, okay, and then our stop loss will be below, just below 61%, is going to give us 1:3 risk to reward ratio, right? Look at it, from 50 to 38, that is 1, to 23, that is 2, to this, that is 3. But we entered from 61.8, so the risk to reward now is going to be 1:4, because ideally our stop loss is supposed to be below or at 78.6. But then if you come from here, from 61.8 to this is 1, to 38 is 2, to 23 is 3, to 0.0 is 4. So this is how profitable this trading approach. I prefer calling trading approach than strategy, because everybody has his or her own approach, okay, the way you approach the market. And don't allow anybody to fool you. Almost everything we do in the market works. It just depends on how you are able to refine it and use it as an edge to trade and make money from the market. Virtually everything works. So don't mind anybody who come and be telling you that indicators are bushy, this one is bushy, there's only this one that is a typical lie. Just try to find an edge in the market. Virtually everything works. Fine tune it and then use it as an edge, and you're going to be making cool money from the market. So if you have any question, anywhere you're confused, you can watch the video over and over and again. But let me just take a quick recap. Whenever you have seen this kind of movement, okay, it can happen on any time frame. You can use your Fibonacci retracement level on 1 minute time frame, 5 minute time frame, 15 minutes, 1 hour, 2 hours, 4 hours, 8 hours daily, right? It all depends on your capital. It depends on your trading approach. It depends on how long you want to stay in the market. Take note that if you are trading on higher time frame, okay, a level that you're going to use as your stop loss is going to be huge. Of course, this is 4 hours time frame. If you are taking a trade from here, for instance, 50.0, your stop loss is supposed to be below this, and you know the distance from here to here on higher time frame, like 4 hour time frame, as you can see, is very, very huge, and you may not have the capital to cover for any drawdown. So but then you can use this approach on any time frame at all. So a quick recap before we say goodbye for today. One of the most important thing is not just the ABC strategy itself. Of course, that is the basic, that is the foundation, but then it is your confirmation, what are going to be using as confirmation to take solid trades, that is much more important. So number one, you get to identify this kind of movement. Make sure a market is trending, and then you look at the origin of a particular trend, and then look at when it's going to pull back. As soon as it starts pulling back, okay, you identify your A, the origin, you identify your B, where it started pulling back, and then you are anticipating a C point where it is going to give you confirmation to trade to the original side. Now, whatever I said for this bullish movement, the opposite is the case for bearish movement. Now, when you have gotten a point where price is reacting, then you start to look at the behavior of price around that place. You look to your left, and one of the most important confirmation is it reacting at a support and resistance level, a verified support and resistance level. For a support and resistance level to be verified, price must have touched or reacted at that point at least twice, right? And I've shown you that already. Then you can look for some other thing like break of high, break of low. You can look for advanced market structure, which was also another confirmation here, because when price got to this point, he tried to give an inducement, okay, tried to move up again, he came back, and then cleared the inducement, right? And that is another confirmation, okay? Then it can be certain classic pattern that will be developed at that level where it is reacting. In this case now, it gives us W pattern or equal low or double bottom, if you choose to call it so. And then you look at the candlestick patterns as well, okay? There can be some other things like other block, trend line, and all that. Now at this point now, if I want to place a trend line from this origin now, you can see that it is also reacting off this place. You can see if I put a trend line here now, you can see. So everything is telling me that price will reverse and continue its original direction from here now. So this is even another confirmation. You can see we have 5 confirmations. Now you can have as many confirmations as you want, okay, but don't let it be too much. If it is the confirmation you need, if the confirmation you need is all you have, okay, that's supposed to trigger you to enter is 5, okay. Now if you get 3 of such confirmation, you can take your trade, okay. Instead, you are going to grade your trade, maybe grade A, grade B, grade C. Grade A would be the one that you have maybe 4 out of your 5 confirmations that make up your confluence, okay. Grade B might be maybe you have 3 out of the 5. Grade C might be maybe you have 2, okay. But then the high probability one is the one that you have more of your confirmations that make up your confluence, okay. Assuming you have 5 confirmations, I just mentioned things now. Okay, the ABCD Fibonacci level, that is one. Support and resistance, break of high or low. You can have advanced market structure, that is 4. You can have classic pattern, that is 5. You can have trend line. Okay, it's not a must that you have these 6 in your arsenal, right? But then assuming you have 6 in your arsenal or 5 in your arsenal, and then you see 3, you can take that trade. Maybe if you see 4, that is high quality trade, and you are good to go. So that's going to be all for this video for today. And if you have found value in it, don't hesitate to give it a thumbs up, and also ask your question in the comment section. Share with others. Try this strategy on your demo, and then let's hear your testimonies, and I will always be on the comment section to respond to you. Thanks for watching, and I'll talk to you in my next video. Bye.